Shares of crude oil-linked companies, which include paint and tyre firms, have seen a steep rally in the past 1 year, while Asian Paints, Shalimar Paints and AkzoNobel India have rallied up to 37% in a year. Tyre makers Seat, JK Tyres, Apollo Tyres gained up to 84% as against 14% rise in the S&P BSE Sensex. Analysts link this upswing to softening raw material prices coupled with calibrated price actions by paint and tyre companies. However, going ahead, they foresee derating for related stocks in both these sectors as valuations get stretched.
Valuation are not very cheap for tyre or even paint companies. You take any company in paint, Asian Paint or Berger Paint, I don't think anything is trading at reasonable valuation. Asian Paint is 70 times trailing 12 months. You take Berger Paint 70 times, Kansai Nerolac 47 times, Indigo Paint 55 times. AkzoNobel, which is a MNC company, is trading the cheapest at 35 times. Average is 55 in paint, In that AkzoNobel is the only thing. Okay. So in tyre, average is 33.
In the January-March quarter of FY23, tyre makers like Seat, Apollo Tyres and JK Tyres saw consolidated net profit jump over fourfold year-on-year, with EBITDA margins expanding up to 553 basis points, whereas paint majors like Asian Paints, Berger Paints and Kansai Nerolac saw net profit growth of up to 401% year-on-year and up to 500 basis points expansion of EBITDA margins. That said, though earnings growth could trickle near-term benefits, analysts warn rising competition and pricing war to play spoilsport for both paints and tyres in the long term.
The decorative paint industry is expected to grow in mid-teens across the medium term, led by reduction in repainting cycle to 4 to 5 years from 8 to 10 years earlier, acceptance of better paint products in the smaller towns, and upgradation of premium brands in cities and large towns. The entrance of deep-pocket conglomerates, including Grasim and JSW, may lead to intense competition in the industry. Grasim's capacity target of 1.3 billion litres is massive, and with the launch of its products in 2024, Grasim will be catapulted to the second spot. The other recent entrants include JK Cement, Astral and Pidilite. Thus, the growth factors for paint industry over the medium term remains robust. The long-term risk of incremental growth being split with a deep-pocketed player looms large. Given the valuations the large paint companies are trading at, we expect structural derating over the next couple of years as the competition unfolds, although earnings growth will be assured over the medium term, though with lower margins. Tyre companies are notorious for high quarter-to-quarter volatility in margins due to changes in key raw material, which is rubber, inventory changes and timing of price hikes taken. New capacities being set up by the local players, we may see pressure on sales growth and margins after a few quarters. Till that time, the trajectory of rubber prices will be important to track. For traders, a large upmove is behind and there are no fresh events in the near term. Hence, they may not get the upside volatility in these stocks in the next few weeks.
Today on May 24, Q4 results, global cues, foreign flows and crude oil prices will dictate market trends.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.